Okay, hi. I'm Rahul Shukla. I run this new beast called Commercial and Rural Banking. It was created on 1st May last year. So we are 1 year old. Obviously, my body size, etc., may not make you think that I'm a 1 year old baby, but that is, how it is. So Sashi, created this group. Obviously, the bank had all these, businesses existing, and he put it, all together and said this is commercial and rural banking. Now, if you think about, basically this business, there are 6 pieces of business over here. One is mid-corporate, then we have wholesale SME businesses, so it keeps going down. Retail SME business, you have healthcare finance, you have transport, where you finance, dealers, their working capital, inventory funding, also retail, and so on and so forth. And then you have the rural financing, where you actually finance farmers. So this is, what the scope of, this business is. On March 31st, I think, basically the size of the business in terms of book size, asset size was about 4,95,000 crore. I think if you look at just the advances, share of the bank, it would be somewhere between 35 and 40%, in terms of share. So that is what it is. But the fact is that, how does this all come together? Why is this, basically even together, these disparate pieces of business? And that was my question, and I think, I could think of only, 2 or 3 reasons. Number one is that this is a PSL heavy business. So this business mission, has to be that I have to create, PSL for the bank, so that retail can grow and, basically wholesale can grow. And I keep telling my team that we are like the middle child. Nobody likes the middle child, right? You always think that the eldest is, the closest, and the youngest is dearest to the parent. So I said, but if bloody I create, PSL, then the company is going to, basically love me for that, right? I enable everybody else to grow. So today, about 65 to 70% of, the bank's PSL is contributed by this group, and we are increasing, the book size in terms of just the PSL origination. The second thing is that if you actually take a look at, where these products get distributed, obviously there is metro and urban, but it has a large semi-urban and rural, focus. So semi-urban and rural, that again, basically there is, you can say different businesses, but where we are distributing, there is a geography synergy over there, right? So I can, cross-fertilize and I can, run that. It comes with, basically the PSL nature of the bank. So that is, the second piece. The third is obviously high growth, 25 to 30%, from day one I said, and now it's like the guillotine on my head that we have to continue at 25 to 30%, otherwise to fir naukri to chali jayegi. The last bit that I would say is in terms of just the nature of the business. The retail SME, so if you're a retail customer, you have certain needs. And new products, they will continue to grow. Or if you are a mature, corporate, you have certain needs. They'll continue to grow. Here, basically the chota banya, when he becomes a small sized, has a different need. When they become a mid-corporate, different need, where there is trust, IPO, this, that. So we have to be, sort of all-rounder and bring, all parts of the bank and service their needs as they basically keep growing, to the thing, and at some point of time, just vida karo, to another group and say, okay, I hand over. And that's how you think about it. So it's different. It is not static. The need of the customer keeps changing, all throughout. The last factor is like the yield. So if you think about it, me with a corporate banking, background, am I even the right person or, to basically drive this? But the thought process that has become clear to me is that if the yield is, nearing retail, and if you control, basically the NPA like you do in corporate, suddenly it's a cash cow, for the bank, which is what it is. And this is how, basically this stuff, comes together. We distribute all parts of, basically the bank, through this particular segment. You should also know that, basically the life cycle management of companies is a very important concept, right? Because if you are a SME, typically, they have one bank relationship and you have 100% of the business. When they become a mid-corporate, they normally have about 1.5 bank relationships, but the bank which was the main bank when they were SME continues to get 70% of the business. And when they become large corporate, right, over a 20-year period, and there would be, 15 banks at that point of time, even then, The original bank where they started will get 40% of the business, share of wallet of that thing. So it is very important that the bank manages it very well. Also in our economy, what is happening is that it is expected, consulting studies would show that by 2030, there would be about 10,000 SMEs who will become mid-corporate, and by then there would be about 1,000 mid-corporate companies who will become large corporate, right? So that is the continuum that you're riding, and a lot of stuff basically comes along with that. This is our performance snapshot. The average asset, last 2 years, 11% growth, and then 26% growth last year. And the income or the revenues that we make, which is just the core income, right? Not the cross-sell that comes, other parts of the bank, etc. Just the core income. In 18% it grew, and then it grew, 26%, right? So obviously one can say, fabulous performance, which is what I'm going to be saying in my, performance appraisal, discussion with my supervisor, etc. But the fact is that, is this sustainable? Can this continue? And those are the only two questions that I have to answer for you guys. Is the market big enough, to continue this growth? कि बाबा 5 लाख करोड़ में अगर 25 to 30% करोगे, तो that is roughly 6,25,000 to 6,50,000 crore in a year. Maybe you pull it off. What about next year? And what about next year, right? So is the market big enough? And do I have a executable strategy, something that is commonsensical, that I can continue to grow? And these two questions is what I will answer. So the first piece is the MSME piece, right? This is a 50 lakh crore credit market, right? Today, banks and NBFCs only cover 20 lakh crore. That is the second column. So the first is total demand is 50 lakh crore. This is a BCG, Jeffries, consulting data, and TransUnion Civil. 20 lakh crore is what is currently being done by banks and NBFCs. There is another 10 lakh crore where borrowers are, borrowing in proprietor's name against LAP and, so on and so forth. And there is about 20 lakh crore which is, being serviced through the informal, system. And there, the rate of interest is 3 to 4%. Right. Now, if they get pulled into, the banking system, it's pretty simple. Instead of paying 3 to 4% per annum, you're suddenly, basically looking at a significantly lower interest rate. You make more money, you expand your business, you create more jobs. And jobs is basically an issue that is, quite front and center in the economy today, right? And that is why you see a lot of regulatory and government focus in trying to formalize, the MSME system. So ECLGS, supported that system. Now they are looking at, other schemes, etc. And there are a lot of schemes, and they keep getting pulled in. So I look at not, that I have, as per TransUnion Civil, 14% market share on 20 lakh crore. Or, as per RBI data where NBFCs are not included, I have 18.4% market share or something like that, right? I look at, on 50 lakh crore, my market share is, just about 5%, yeah. I can continue to grow, for a while. Unhindered in a way, right? So that is, one way we think about this. The next is just take a look at, our growth of lending, and I show this to, make a point. The bars don't have, basically numbers because we don't disclose this. But if you look at, from FY16, the CAGR of the growth rate of the asset book in the SME is 26%, and last year is 44%. So what happened, basically this 26%? If you see the last 3 years, the slope, basically becomes, sharper, right? Compared to the growth before. And these are, the periods that were coincided with the pandemic. During the pandemic, if you were, basically a SME who was sitting maybe in Karur or somewhere else, right? You were banking with a particular bank and your digital wasn't working. It was a question of survival. You needed a bank whose digital systems were working, and you could, basically do trade, LCs, bids, collections, payments, everything, all together. So there's a lot of talk, right, on digital. You can be a digital idiot and you can sound, digitally very savvy. That is just how it is. But the fact is, does that digital work? Now, I can demonstrate to you that my digital works, and 100% it works, better than the other banks. When I look at SLBC data and how many proportion of our customers are digitally activated and what proportion are using it. So that effectively has helped us. The proof of the pudding is in the eating. The branch was there. and the digital systems were there. Even today, when I buy, I don't know about you, I buy a laptop in Chroma, I tell them to set it up. I don't try and do it yourself, DIY in my house, because kuch problem hoga to bhag ke jana padega. So we, that is how it works, that the customer has the benefit that somebody is hand holding them, and customer has a benefit, basically that the systems are good. Obviously a lot of customers gush, that they can't, do business without our systems, but I think, that is RMs only telling them to say all that to me when I visit them, so I discount it. But I can tell you that today those systems are so good. What does the SME need? He has to give stock statement monthly. If the stock statement is not given, then the limits will drop. If the limits will drop, then 2% penal interest will happen. Okay, they will email you stock statement or give it, and from the branch it will go to some central office in a nationalized banking system, and somebody has to update it. There's a gap, and it's a big issue. It's not a small issue, right? In my system, they can upload it on the system, and it gets ticked off automatically by the system as having been submitted. Their limits will not drop, their checks will not bounce, right? And they will not have to do penal interest, reconciliation. These are very simple things. So the needs of the customers are very simple. You are bidding, today for a contract, right? You want, suddenly you've used up your limits and you need, 20% additional limits. You go to, basically a nationalized banking system and you want those limits, you will have to pony up collateral, you'll have to give data, you will basically take another 60 days for evaluation. There are many areas, like in Andhra, I said the other day also that 6 months, limit renewals haven't happened. Now, if that is, the situation, in HDFC bank system, you basically apply for that 20% so that you can get that order. It's QED, why customers are, coming to us, upward sloping curve, right? That is the point that I'm trying to make, that the systems are such. And the second thing is last year's 44%, I today believe that we have a heft in the marketplace that other than the branches and all our other channels we'll talk about, today the promoters are getting other promoters for us. From the association, if they have their son married into a family, that is also a promoter family, they will get, and that network effect is what is basically helping us, and it's fantastic because this can continue for a few years, right? It is just a positive spiral curve that works. This is MSME market share as per RBI's data. This does not include NBFCs. 12% in March 20, 14.6 March 21, and 18.4%. And for everyone who basically looks at MSME, micro is a very important need, right? And the micro and small segment, that also we have a 16.6% market share. So we quite are pretty strong in this particular area. How we look at, basically our presence, it is the geographical spread. We believe that we have to be everywhere, okay? Our goal is to go out and do banking in 650 districts in the country. There are total 730 districts in the country. I didn't know this number, 4 years ago, but we all learn, as we go along. But that is where we want to do business. And today I'm not looking at my position in a state that I'm number one. I am number one in Gujarat. But if you go down, basically from that small hump, right, from Porbandar to Veraval, my market share is low. I may be strong around, Chennai and, around Coimbatore. But if you go to the middle Tamil Nadu, around Pudukkottai, my market share is low. Rajasthan, we are number one MSME bank, as a state. But if you drive from Bikaner to Bhilwara, my market share is low. And why should I shy away today from doing business in Srinagar? Because now SARFAESI is applicable, right? All the steel guys, in the government infrastructure contract, they have no, basically inventory. All sold out. Cement, all sold out. Why should we not do it? Why have the fear? Because today, things have changed. Today, there are at least 6 states in which you can do digital mortgage. That is the thing that, basically compresses disbursement time frame from, 2-3 months to about 2 days. And we are pushing that it should be done across. Do you know that in Kashmir today, there is a land passport that is given, which is in 3 languages, in Urdu, English, and Hindi. So anybody who had any issues about, land ownership, details, etc., it is all there. In Uttarakhand, you can create a mortgage digitally, right? So this is how, things are changing so that we can go out and accelerate, giving credit even further. Fairly evenly distributed. And when you look at growth, one of the channels that we use is HDFC Bank branches. So out of 6,300, 5,300 branches do MSME business. But out of 5,300, if we are 35 to 40% of the advances of the bank, now just take, how many branches have MSME advances more than 25% of the branches advances. It's only about 2,300. So I still have 3,000 branches where we can push and increase our market share around that particular region. It comes with referral. People know it is the same community, etc. Good business comes, and that is how you look at it. So we have a long runway other than the market within our system to continue to grow. This is our MSME GNPA trends. It's TransUnion CIBIL data. The numbers are not there, but the numbers will be available to you if you look hard enough. The topmost line is the public sector banks, GNPA, that's about 21%. The second line is the NBFCs, GNPA, that's about 11%. The third is private sector banks, excluding HDFC Bank, which is about 7.8%, and the lowest line is 1.4%, which is us, which is as of December, and then it went down further. So I come back to the same point: keep growing high, manage your NIMs properly. When we grew 44% on the MSME business, everybody says rate cut diya, ya ye kar diya. So I basically go back and say we grew 44%. But do you know what was the impact on my NIM? We were in a very soft environment, right? Our NIM went down by 1 basis points. So 1.44 times is basically the book growth, and 0.99 is the multiplier for the NIM. So I am still growing quite dramatically, right? And if you are able to control this, look at the amount of basically cash that gets generated for the firm. This is a strong moat for the bank. This is not replicable easily. There are only 2 banks around the 3 lakh crore mark, and every single private sector bank is less than 1 lakh crore. So whenever they ask me about competition, I say please don't ask me about competition, because we want to do business together with State Bank of India, and we will continue to do that. We don't want to compete. There is enough business for us to go out and do it, but there is a strong moat, and the bank knows how to do it. This is our agri business market share. It is strategically important for the bank. Now, what do I have as a market share? Today, I have 6.4%, right, as a bank. And we aspire to go to 9% because we have to meet our agriculture lending guidelines, etc. So the total business in this space is about 15 lakh crore. That is the size of the agri lending in the country, and out of that about 5 lakh crore is secured and 10 lakh crore is unsecured. But the fallacy today in our system is that there are 10 crore farmer families. So agar divide karoge, to you can say that every farmer has got from the banking system 1.5 lakh rupees of credit. But in reality, the banking system has failed our farmers because 6 to 7 crore farmer families do not have access to any credit. They're not. Now, okay, I can be fearful of basically doing unsecured for small and marginal, right? But why have that fear? Today you have FPO, you can go out and do that. You have corporate supply chain, you can go out and do that. You can basically take a security of gold, and today every farmer has 2-3 other sources of cash flows. You can go out and do that. So if you go forward, and our goal is very simple: first control the NPA. So our NPA is was 4.73%. It was we're trying to bring it down to a GNPA number of about 4% or so. But if you go out and think about it, we are expanding our footprint to 2 lakh villages. There are 6.4 lakh villages in this country. We were at 98,000 last year March. We were 1.3 lakh as of this March, and we will in 2 years be 2 lakh. And my push is only to find 2 farmers in every village and give credit. That's all. Only 2 farmers. I'll be able to basically get all this market share increase and all that, right? And a lot is changing because there is a push towards growing farm income, farmers income, etc., right? There are about 25 to 40 different 25 central schemes, and then there are many other schemes which basically promote piggery, fishery. The ECLGS was one, CGTMSC is another. There are all other types of rural agri infra fund. That where you have government support, guarantee as well as subvention, that you can go out and do that. So you would have heard that we did ECLGS, fantastic. great. But, in agri-infra fund, we were the only private sector bank which met its target that was given by the ministry, and they ran a competition from 1st February to 15th of March. No other private sector bank did it. And second point is that in terms of total amount of disbursement, we were second only to Punjab National Bank. All other banks were behind the bank. So the bank believed in that the fact that there is basically a agri-infra fund and warehouse, etc. creation that has to be done. And if you go out and do that, the cold refrigerated LCVs that were financed for COVID vaccination transfer, etc., you are basically again building a moat not just around agri financing but rural financing, where we have a strong presence through our GIB business who run rural ecosystem. But the bank is basically pushing deeper and deeper into that space, without being very afraid of NPA. Now, this is our strategy. Geography penetration I talked about, diversification from staple crop. We don't want to only finance sugar cane, rice and wheat. We don't have allergy to it, but we want to do other stuff. So today what happens is that if you are a rice farmer in 1 acre, you make 25,000 rupees a year. But if you move into a fruit, then suddenly you are making 3 lakh. Go to Kutch, they call it kamalam, but it's actually the Chinese dragon fruit, right? There's farms and farms of dragon fruit. Great supply. From there it goes to the Kandla port, gets exported too. So those are sort of things that are happening. You look at basically Kashmir today. The apple farming is changing to high density apple farming. You go to Imphal today, just 1 kilometer outside. Today they do rice and fish farming together in the field at the same time. At the same time. You go to Darbhanga area, 85% of your fox nuts or makhana. All of you are English educated and all that, so you will know fox nuts. I know makhana. We eat during Navratra and all that. That is grown in that area. But makhana grows in a water body or a pond together with fish. You go out and basically look at financing. There is enough and more opportunities in this country to finance and keep growing. Government schemes we spoke about and small and marginal farmers we spoke about. We just have to shed inhibition and keep at it. We are on that path. Small and marginal farmer, we are small. We grew 37% last year. We are planning for 100% jump this year. It's a paradigm shift that we are trying to achieve. Transportation segment, we were, we are number one. Our HCV market share is 28%. CE, commercial equipment, basically 17%, 8%, etc. But the fact is that whether you take a look at either a captive NBFC of an OEM, you take a look at any NBFC specializing in transportation finance, and you compare my numbers, our numbers are today larger than anybody else. That is, what the bank basically is doing. Now, the question in this business always is that, this business does great when the GDP growth is there and then it goes through a 3-year cycle, right? That is the transportation business. We have to make sure that our growth is, proofed from GDP growth rate, irrespective of the GDP growth rate. So, a few things that we are doing. MHCV, strong. LCV, slightly lower market share. Can I use the CGT MSC, scheme more effectively, right? I can also get some OEM support, etc. The second thing that we look at is that there are 3.5 lakh equipment that gets sold in CV every year, but there is 2 lakh which gets traded in used commercial vehicle, right? That's a Shriram business. Why am I not strong in that? I have to basically push that, right? The third thing that you think about is that all the new equipment that gets sold, that's 3 lakh crore, right? Every year. Or last year was 3.5 lakh crore and it was 3 lakh crore. But together with that, when the transporter uses for FASTag, for diesel, for spare parts, for tires, that expenditure in a year is 7 lakh crore. All that we need to do is that you have the largest bunch of transporters with you and their history, and you move into financing their working capital needs. And as you basically start getting even half the market share, for the next 5 years, you've proved it that, you can continue to grow. So 2 things that happen. One is that the market size is much bigger than what we think of. And the second is that, how to transition into that, which is, where we are working, in this particular year, in this ecosystem. Healthcare, again, a major growth area. It's a small part of our portfolio. It's a high market share, but it's just small. But today, every district has a hospital coming up, right? In UP before elections, they had announced in 14 districts, that there will be a new hospital, and now they're going to cover all. And there's a government scheme also which supports, basically with guarantees, etc. So we are looking at this. It's a very interesting, play. We already have a large market share because if you have 17,000 chemists, 14,000 laboratories, 6,000 plus hospitals, and 3.2 lakh doctors, we are just basically trying to capture more and more out of this. This is our goal: growth, PSL, and income, which we have to deliver for the firm. How we are going to do it? A lot, I've spoken about, but geography expansion is a fundamental tenet. Market share gain continues to happen at a rapid pace. Whether you can call it is the HDFC Bank DNA or of DNA, not of aggression but of service, of service. That we want to basically push credit into the system. I mean, we are a country where 70% of the rural districts today have a credit to deposit ratio of less than 10%. And then people talk about, growth rate of banks. The banks here can grow, until 2050, yeah. So that is, something that we need to do. The government schemes, we have to follow because these are very thoughtful schemes which are changing, the landscape. And, looking at high cash crop, clusters, etc. We use the channels. We have direct sourcing. We use, branches. We do digital sourcing, through our website. Clients can apply. VRM, today we sell tractors as well as CV, through that Sampath Kumar's, virtual relationship management team and common service center. There again, we basically look at Kisan credit, etc. And we just have to scale all of that up. Our focus is on people, succession planning. 3 levels down, if there is anybody who moves to other part of the bank or, leaves within 24 hours, we should be able to be announcing a replacement, which is where we are ready today. And this business is, about basically going deeper. Then you need a lot more supervisors in every district and every such place, and you have to get their mindset together. We spend a lot of time in that. And it helps also develop, the managerial bench. Training and focus on productivity is, key tenets for us. This is geographical expansion, from 135 cities, we will be in 250 cities. From 573, districts, we will be in 650 districts. And from 1.35 lakh villages, we will be by next year 1.65 lakh villages. And, this. We talked about SME digital offerings, we have all of this stuff. The key thing I will just come back and, basically show you, one simple thing. This is our goal. Our strategy for PSL on the right side, and then we are going to do 1 + 1, for the next 3 years. So our strategy is very simple: 1 + 1, then 1 + 1, and then 1 + 1. So the first 1 + 1 for FY23 is very simple. Whatever was our book as of March 31st in the MSME business, we are going to do the same amount of disbursement, in this year. So anybody who comes and, small NBFC says, my book is 1100 crores, so I ask them, next year will it be 25,000 crores? So if they're falling off, then I say, look, the largest market share, book built over 26 years, the bank, basically has the, desire to basically do the same amount of disbursement. We will be changing, our systems, which is under development, but, those systems are not 5 or 10% upgrade. Those new systems should have the ability of handling 2.5 crore more customers who will come from the informal system, towards the formal system. So that is getting rolled out, this year. So next year, our 1 + 1 is doubling the number of entities that we bank with. And that doubling, before anybody says, we're going to dilute standards, that is not going to happen because Jimmy is here. But the fact is that on 11 lakh customers that we have, and our NPA is, excluding agri 1.15%, out of 6.5 crore customers, we will be able to find 11 lakh more customers of acceptable equivalent capacity. You just have to go deep into, our country. And the third year is, basically from FY22, doubling of, basically our revenues in the business. Now, just on digital, I just share with you, this one slide, and I came across this data. There is, one district called Samba, which is on the border of, basically India and Pakistan, right? It's a very small border. If you take a look at, basically this data, HDFC Bank has 780 customers, which is second only to Jammu and Kashmir Bank. They are the largest bank in, the state, so we acknowledge that. So we have the second largest number of, business accounts. But hey, by the way, 778, 100% is digitally activated. This is not my data. This is SLBC data. You can go back and look at all your digital favorites and see, what is their number of customers and what is their activation, right? So in this, same thing, if I show you for Srinagar, right, even more stark, right, 8,210 accounts, 8155, 99% digitally, basically activated today. So when you come back and look at the secret for success in the MSME business, you have to have distribution. Whether it's Srinagar, Samba or Arunachal Pradesh, the bank has distribution. And you have to have digital that works. Look at third-party data, don't look at internal data, because there will always be ideologues internally who will be saying ki dekho utilization to itna acha hai. So third-party data is a validation, which is what we look at, which is what we live by. And I stop there. Thank you very much for listening to my monologue.
So thanks a lot, Rahul. We have about 10 minutes. I think we should start with the right. In case there's anybody, could you please raise your hand? And we'll have someone get to you with the mic.
So good, because now you convinced that the market is very big and my strategy is perfect, no? Near perfect.
No, so great presentation and always been a learning listening to you.
Not great presentation, great delivery, yeah. Aise bolega to all management is sitting here, yeah.
Yes. I correct myself. So, now that we're going to merge ahead, in terms of PSL and semi-urban and rural, we always had a strategy to move deeper into semi-urban and rural. But with the balance sheet size getting such larger and PSL is very important, the scale at which we'll have to move up, is it different? What is the strategy in the merged entities context?
No, that's correct. You're absolutely right, because that is a challenge. But that is also an opportunity. Many times you are so successful in doing what you're doing that the windows in your, between your ears and sight is all closed. You don't look outside, right? When you go out and say, how can I do small and marginal? You will find a way. When you go out and find, affordable housing, you will, then go out and find a way, because Sashi must have, spoken a lot about that, right? Farmer expansion, we are doing it. This was our plan even without the merger. But now there is a certain amount of urgency that you have to go. Now, the system offers you two things. You can do organic, or you can do, basically inorganic through PSLC, IBPC, etc., right? You will have to transition to a glide path and go out and do that, because what is your, solution otherwise? Non-compliance is equal to, putting money in RIDF. So, but that's not, the right way, because if the government is pushing you for it, you have to find ways of doing it, responsibly, and, that urgency is there.
Necessity is the mother of invention. I can remember a time in the bank when we didn't want to do agriculture. We thought it was very high risk. We probably have India's second largest agriculture book today, with India's lowest delinquency. It's possible. You just have to apply your mind.
On the agri book, all private sector banks excluding HDFC Bank, the total Kisan credit card outstanding is about 80,000 crore. HDFC Bank alone is, around 65,000 crore against that. Unka itna, hamara itna. And at the end of the day, between December 31st of last year and year prior, we have shrunk our NPA by, I think, 1.2 or 1.3%. Everybody else has, basically dramatically increased their NPA. That's what, basically the situation is. So we have to do it. We are seized of it. We've put, people behind it. We've put, policies behind it. And we are measuring and tracking. And, we take great pride in that fact, yeah.
In case there's anyone on the left side, if you could just raise your hand.
So first question from the last benches. You said regarding the farmers, right? So, what about the farmers who have taken the loans and because of floods, droughts, or certain problems, the government waives the farmers' loans, like from the government agri banks?
Just
So
stop
how?
there.
Okay.
I get. So what happens, when there is a waiver and all that? I don't want to wade into that question, but I'll tell you what happens. Okay. Today, you have a Fasal Bima Yojana. And if there is a crop failure today, right, the farmer gets the money. That money, basically takes care of his needs and investments, but that money does not, go out and repay, the lending, right? So you have to work with insurers to have a better product that not only takes care of the farmer's loss and livelihood, but also takes care of retirement of debt. And the system is, basically gradually moving towards that. The second thing that I would say is that even a 10-year-old NPA does not need to be written off, because there comes a time where the farmer comes out and basically gives you back the money. For example, in the month of April, we kept disbursing new loans, but our book was only shrinking. Why was it shrinking? Because they had so much cash flows from wheat. They were only repaying and repaying and repaying. That is what you basically went through. So certain systemic changes have to happen. Fasal Bima Yojana is a good first step. Combining insurance for loan repayment is another step. The third thing is we are pushing is for expansion of the pledge financing. What happens is that the farmer, when they have the produce, and the small farmer, they don't have the ability to store it, then they have to go out and basically sell it at the prevailing price. That could be high, that could be very low. We are buying tomatoes at 100 rupees. If you go where tomatoes are being produced, that is about 3 or 5 rupees at this point of time. Now, it allows, the farmer, the pledge financing expansion through the regulatory changes, to store it and then, basically sell it later, but not have, basically the debt overhang on their head, because the bank takes, the risk or does lending, basically against the collateral that you have with the warehouse, collateral manager, and you give them the money and they repay, their crop loan. That is where the system is going. So the rural ecosystem is completely changing. Look, we always think about rural from an agri-PSL perspective. That's 1971, when 70% of the GDP was agriculture. Today only 15% of the GDP is agriculture, but 60% people are still living in rural areas. And the needs of credit have dramatically changed. It's not just farmer financing. Today the next three basically big things for which the farmer goes out and takes loan is home improvement. We can do that. They go out and basically do consumer durable financing against security, whichever security, you can go out and do that, and they do two-wheeler and four-wheeler loans. So that space is just completely changing, and agri processing is becoming a reality in this country. You go to Marathwada, where the farmer used to make in a good crop season 25,000 rupees earnings per acre. Today, because they have moved, with the help of, people into fruits, that is about 3 lakh rupees, per annum in terms of earnings. So things are changing on the ground quite dramatically and quite fast.
We'll just take one last query this side. Thanks.
I just wanted to know your thoughts on the book which is under Emergency Credit Line Guarantee Scheme. How do you see the asset quality of that
book? Let me just tell you this. ECLGS, when it came, people can think about it, in many different ways. I'm proud of how our bank thought about it, right? MSME lending, everybody does on personal collateral of, the proprietor. Because for years, the proprietor was, basically taking money from the business and, buying property and creating, and you were doing it. Today, after GST, they're not able to take out, basically that cash. The cash remains. So it is transitioning into, you don't have collateral build up, you want, more credit, there's no collateral, and you have to look at, basically the net worth of the company, and, then to go out and do lending. And that system is, changing. After 2025, that will be, the predominant mode of, financing. The bank took a view that let's follow the government, support, that is number one. My team basically said, if we give ECLGS, the rate is lower than OD, we're going to lose earnings, no problem. But the fact is that they got 30% extra credit at no extra collateral, right? Now, what did they do in the beginning? When they took, basically that 20%, that is how it started, they went on, reduced, utilization of the OD. But today, because of that 42 or 43,000 crore that we have lent and we are the number one disburser, the OD utilizations are going up. So you've given, basically with the help of government, 30% extra credit without, basically additional collateral. And from 2025, that is also going to, change quite dramatically. The next half of, the decade will be a completely different, scale and game in terms of MSME lending, where you will see a lot of pain, across the banking system, and you will see some clear winners, increasing their lead. Obviously, we would put ourselves in that clear winner, category. Yeah.
ECLGS, depends on the original clientele you had. If you had good client selection, ECLGS was a liquidity tool for an MSME customer. ECLGS was not a stress management tool. It was liquidity to kickstart another working capital cycle. It was just liquidity, which held up well. But it's a misnomer to think that it was a stress management tool.
Great. Many thanks. We'll bring this session to an end. Many thanks, Rahul. Jimmy, if you could stay with us, we'll get our next speaker, Mr. Arvind Kapil, Group Head, Retail Assets and SLI. I see him seated just next to us.